My first question is about this gathering today. Who is there? We've been talking all morning about the high-profile U.S. CEOs that are there. Who's there from the Chinese side? And are they senior enough that it actually makes this gathering quite significant?
Oh, yeah, 100%. I think the very key is the keynote speech was given by Premier Li, who really reiterated the continued opening up of China, as well as addressing and acknowledging some of the challenges China's economy faces, but reiterating their openness to foreign investors, foreign corporations, as well as pushing a little bit of a domestic consumption story, something that would really benefit a lot of those U.S. CEOs from multinationals that are doing great business in China today.
And are Tim Cook and Apple positively embraced? Are they seen as Apple as opposed to America's biggest company, if they are currently the biggest this week?
Yeah, I mean, last week, Tim Cook opened the 35th iPhone store, the 35th Apple store in China, in Shanghai, their largest store. And thousands of people were waiting for the store to open. He was given almost like a hero's welcome in China, which just shows it's not just a venerable, well-respected brand here in the U.S., but certainly globally, including in China.
So let's talk about some of the companies you think are worth picking up in China. And you mentioned the positive kind of consumer story that companies like Apple want to be exposed to. What are the domestic Chinese names that you think are worth buying with that theme in mind?
Yeah, we're coming out of the Q4 earnings seasons for the internet companies we hold in KWeb, and you're seeing a potentially the trough taking place in Q4 as China's economy slowly and incrementally comes back. So we like the e-commerce plays because they're geared to that domestic consumption story as it comes back. So that's your Pinduoduo, Alibabas, and JDs. At the same time, you're seeing a pickup in travel. So Trip.com is another name that we really like in the space, as well as eating out, as we saw with Meituan's very strong Q4 results last Friday.
Talk me through your current perspective on the valuations in China. I mean, clearly a lot cheaper than they used to be, clearly a lot cheaper than the NASDAQ, for example, but with it quite a lot of political risk, particularly as a foreign investor. Weigh that up for us.
I mean, certainly the valuation disparity between U.S. tech and China tech is just absurd. And this is beyond dirt cheap. It's basically they're just giving it away for free. I think with that said, we have to think about what are the catalysts to bring investors back into the space. And I think the earnings season we saw in Q4, the projections for Q1 look pretty strong. At the same time, we see very strong buybacks from the companies, as well as some of them are actually paying out dividends. And just with a forward PE of just 14, which is about 50% of what the long-term average is, we just see a really compelling opportunity that the companies are clearly believers in their growth prospects. And I just think investors, if they can start to come back and make money in China, they'll start coming back much stronger numbers.